Okay guys, we are back, and hopefully with the cam working, right? It is working right now. Yeah, great. It is finally working. I used the break to fix this issue, and now we are back. Okay guys, so what we are going to continue doing is that we are going to analyze the market, and of course I'm going to take your requests, and the first request I got today was for the Aussie dollar. Okay, as always, I always encourage you to start with the daily chart. Okay, so the daily chart shows that we have been in a downtrend for quite a while, and as you can see, we have been dropping, lower highs, lower lows, until we reached an area since August that we were unable to break. Okay, this is the area I'm talking about. And we were unable to break this area. It's just below 67. You know, we got to, let's see what is here, 66.77, 66.88, and here 2 days in a row, 66.72 and 66.71. So we're talking about the 70s here, guys. We have been dropping for quite a while, and we got to the 66.70s, and we started recovering again. We are almost 200 pips above that price level at the moment. What we need to focus on now is the thing that stopping more advancing, and of course it can be specified using these lines. So as you can see, guys, we have been trading between, let's call it, it's not 69, it's just a few pips below 69. We got to, the highest was 68.85, and we got 68, sorry, this is 68.95, not 85, and 68.91. And these are the daily extremes that form what, in my own opinion, is the resistance for this pair. So we have a resistance, obvious resistance, just below 69. We got to 68.95, and from there we started falling again, only to find support around the same previous bottom. Okay, so this bottom, very close to it, very close to it, very close to it, very close to it. We have five daily lows. Let me show you between the 70s and the 90s. Okay, so it's a very tight area here. We have 5 daily lows here, and up around 69 we also have 1, 2, 3, 4, 5, 6 daily highs around the 68, 90, let's say between 90 and 95. Okay, so in my own opinion, the support and resistance on the daily chart are extremely obvious. Hello, Georgios. I told you, buddy, I'm going to use the break to fix the camera issue, and I think now you can see me. Can you see me right there on your right hand side towards the top of the screen? Can you see me now? So it was not working. One of you guys, thank you very much, said that it was not working and I had to fix it, and now it is working, which is great. Okay, so let's go back to the Aussie. The Aussie support and resistance is obvious on the daily chart, and we need to see a break of one of them. We need to see one of them breaking, giving us more clues about the direction of the market, about the strength of the bulls and bears. We are now, as you can see, of course, we are much closer to the resistance than to the support, and this means that we should pay attention to this resistance. The highest price we have seen since falling, yes, since August, for the whole month of August, September, and October, the highest price was 68.95. So 68.95. This is the resistance that we need to focus on. And now we are getting close to that. We want the price to push higher, 25 pips, to reach that level. Now, if it does reach this level, we need to decide on the chances of moving higher again or lower. Moving lower again or higher, in something that has not happened since August. So to me, I will be watching this today, and if I see the price breaking above this resistance, then I will be encouraged, of course, to buy the Aussie dollar. So the resistance is obviously 68.95 for today. Now for the support, of course, we have the support here, but it's 200 pips away, and of course we are going to find closer levels of support. One of them is, of course, provided by this trend line, the rising trend line from the lowest price we have seen on the Aussie, I think all this year. Actually, it is for more than 1 year. Yeah, so this is the lowest price in the long-term trend, and the rising trend, which was seen on October 2nd. As you can see, October 2nd is very close to October 1st, when the euro reached a multi-year low. So it seems to me like these two currencies are in sync against the dollar. Okay, and they are trying to recover, both of them, of course, against the dollar. As you can see on the chart, the Aussie has recovered 200 pips up from the low it saw on the 2nd of the month, and the euro recovered more than 300 pips from the low it saw on the 1st of the month. So maybe we can use them to confirm each other. If you know, for example, the Dow theory, Charles Dow used to say the two averages that he used, the industrial average and the transportation, of course, back at the time it was called the railroad average, needed to confirm each other, meaning that if we had a significant break on one, we should look to the other and see if there's a significant break. And if we had two significant breaks around the same time, very close to each other on both averages, that confirms the direction of the market. We can use the same concept here between the euro and the Aussie. They are both major currencies trading against the dollar. So if we have the the euro breaking above 11.17, which is touching at the moment, it is currently at 11.16. And at the same time, or around the same time, we see the Aussie breaking 68.95. In my own opinion, that is confirmation. They confirm each other. Okay. Hey Nick, welcome back, buddy. I'm sorry about this disconnect thing. I had to fix the camera because you guys told me about it, and when you tell me about something, I do it. Okay, so you're over me. You make me do things. So anything you want me to discuss, analyze, talk about, any questions you have, please shoot. When you told me the camera is not working, I stopped the streaming and immediately went and fixed that, and I'm back again, buddy. Okay, so welcome back, Nick. Welcome back, Michael. Now we see you, and when will I see you? That's my question too. Okay, so guys, as I was saying, we can really use these two pairs as confirmation on the dollar weakness or strength. Of course, we're looking for dollar weakness. Now, if they both break 11.17 on the euro, 68.95 on the Aussie, if they both break above these levels, then the dollar will be expected to start weakening against two of the majors. That is better than one, of course. So this is the kind of confirmation I want to see. I really hope that today we are going to see the euro breaking above 11.17 and the Aussie breaking above 68.95. In this case, what are the targets? This is the first thing that we need to discuss. Well, it has been dropping for quite a while. Look at this unbelievable monster of a downtrend, you know. And of course we saw the same thing on the euro. Euro last year it was trading at 125, and we got to 108, 78, 79, 80, depending on your source. Around that price we got a 29-month low. Same thing for the Aussie. As you can see, we are trading at a low that we have not seen for quite a while. So with this, of course, guys, we are hoping for an end for this trend. We need to see an end for this trend, downtrend, and we need to draw trend lines that can help us identify where is the level that, if broken, would be the first indication that the downtrend is over. In my own opinion, although this trend line is only touched twice, but its slope is very good. It represents the downtrend in a good way. Of course, I would really love it more if it was touched more than we only have 2 points on it, and this is some kind of weakness for trend line. But the thing is, look at this. Where is it? It is running today around 88, okay, or 80s, not 88, actually 82, something like that, which is around what, 10 pips below the previous bottom. This is amazing. This is amazing. This confirms that the area between these two red lines here is really the resistance to watch for today. So my resistance is going to be between 82 and 95. I want to break this area and I want to start moving higher. If we break this area, my recommendation is a long position on the Aussie dollar. And what is my target and stop? Let's start discussing them. In my own opinion, this is the best point to start calculating the retracement levels, because it came after a very strong recovery attempt, including, of course, the flash crash. If you remember that night, do you remember it? Who was in the market on that night when I think the Aussie, the yen, and the Turkish lira all moved in for hundreds of pips overnight, only to, of course, come back after very short periods of time. And they call it the flash crash because things crashed like a flash very fast, and the market went up again, started, all of them recovered to levels even higher than they were. After that, some of them, like in this case the Aussie, started falling again. So after this extremely notable recovery attempt from the flash crash, I think the latest part of the downtrend started here on the top that we have seen after the flash crash, which was seen on the last day of January at 72.95. Okay, So from there, we started falling again. And I really believe that calculating the retracement levels for this part in specific is going to help us identify the best targets for breaking this trend line and this resistance area right here. The first level is 6909. Of course, that's not a target, you know. It is only pips above our resistance. And when you break a resistance of this kind, look at this. Look at the price behavior here, and again here. Okay, and look at the trend line that is going right through this resistance area. So you're telling me after breaking this resistance area, we're going to get to 6909, and that's it? I don't buy that. So I need to find higher targets. The 50% level for this latest part of the downtrend that we have picked to calculate retracement for is at 69.83. Now we are talking. Okay, 69.83 is a good target. So if we will be buying above 68.95, let's say 10 pips above that at 69.05, and my target is 69.83, well, yeah, that is a good thing to do. In my own opinion, that is good, yes. And yeah, I really believe that's a good target. Now, what about the stop, you guys? What about the stop? And before we talk about the stop, I want to take another look at the chat. I want to make sure everybody is here because I'm sorry about this disconnect. I had to fix the camera. I think that's great. And Heather, very, very great. The yen, yes, Heather, we're going to look into that just after the Aussie, immediately after the Aussie. Sell Aussie dollar? No, Harry, no. You need, if it breaks 68.95, you should be thinking of buying it. And as you can see right now, the euro is pushing up against our resistance of 11.17. At the moment, it is at that price level. So things do not look very good for the dollar. You should be waiting for clearer signals, of course, on the Aussie. If it fails around 90s, in the 90s again, well, you may try that, but I don't recommend that. What I really recommend for today is waiting for the 90s to break by just 10 pips. Our resistance is 95. The top of the area of resistance is 95. So in my own opinion, 10 pips above that, you can initiate a buying position and wait for 69.83. That's our target for this trade. But what if we got in and the market started moving against our expectations? Where should we place our stop? Let me see. For this, we're going down to the hourly chart. And as you can see, it was a good month for the Aussie, just like the euro, reaching a multi-year low very early in the month and then recovering to highs, recovering for hundreds of pips. In the case of the Aussie, it's around 200. In the case of the euro, it's around 300. So the recovery is good. It's going very well, as you can see. Higher lows, higher highs. That is the definition of an uptrend, or at least a recovery uptrend. One thing that I really want to see is this. I want to calculate the retracement level for this move. I want to see if this drop has retraced something significant of this recovery attempt. Did we stop very close to a key retracement level? Yes or no? As you can see, I'm sure you agree, the answer is yes. We have stopped at what? 68.06, while at 68.02 we have the 50% level. This is an indication of strength, of course, and if I was following this at the time, because we bottomed only 4 pips away from the 50% level, and then we broke above the falling trend line, this falling trend line, I think here would be a good area to initiate a buy position. Of course, I'm saying this here in retrospect, but I'm implementing exactly the kind of analysis I use in initiating trades when the price bottoms or tops very close to a key retracement level like the 50%, 61.8%, and then reverses direction and breaks an important trend line like this one, then you should get in. So breaking above this falling trend line after bottoming very close to 50% level, you should move. You should expect the market to move higher, and you should get in on the long side of the market around here, around 40, something like that, because we broke above it around 30. Yes, so around 40 was obviously a good area to initiate your buy position, because if you did, you would be in 30 pips of profit right now. Okay, so we were not here. That was a couple of days ago. We did not have, that was on Monday, actually, and Monday evening, my time. I do the webinars in morning my time, so it was not, we were just not following this at that time, unlucky for us. If we were, we would have been long Aussie dollar. But fear not, there is always another chance. When you miss a chance, it's not the end of the world. You can always find another chance. And in my own opinion, the next chance here is a breaking above 68.95. 10 pips above that is enough. Get in and place your limit at 69.83. Now, what about the stop? This is what we came here for, to the hourly chart, looking for a stop. What do you think, guys? If we got in on the long side of the market here, a buy position, and then the market started falling, of course, that can happen any time. In my own opinion, I don't want to wait for the price to break below here, because that would cost me almost 100 pips. I don't want to pay 100 pips for this. So what I do in these situations is that I use a retracement level for the whole recovery attempt. Okay, this is the attempt I'm counting on to break above 68.95. Now, unfortunately, this technique, when you want to use this technique, you need to think of the price that it's going to reach. So we cannot use the current price of the market to calculate this retracement. Why is that? Because at the time when we get in the market, that means that the price would be at 69.05. I'm gonna, yes, something like this. So this is the move that I want to calculate retracements for, and I'm really focusing on the 61.8 here. This is the level that I use for stops. Actually, there is another level. I don't want to discuss it here because it's not talked about a lot, and it needs presentation. You know, I need to present it to you before I start talking about it. But this is this is one of the very most important levels. It is 68.44, so we can place our stop 10 pips below that, maybe 15. The Aussie is not a volatile instrument, so we do not need to place 30 or 40 pips below the support that we are counting on. 15 pips, that is enough in my own opinion. So guys, what I really recommend here is this. I'm going to leave this on the chart and come back for it tomorrow. Buy at 69.05. Stop, we said 15 pips below the 44, so it's going to be 29. Stop at 68.29 and limit at 69.83. This is my Aussie dollar recommendation for the day. Okay, keep it on your mind. Follow the price. See if things move in the direction we are expecting or not. Of course, up until now, at this level, it is too late to count on the break of this trend line as an entry point, and it's too soon to consider, the price is challenging the previous top and will be breaking it. So we cannot. I really don't like to do anything in the middle. Either on the break of the trend line, which of course we missed because it was a couple of days ago, or on the break of the next resistance area or level, which is 68.95. That means 10 pips above it. 69.05 we get in. Okay, guys. So I'm gonna leave this on the chart for now, and we're going to come back tomorrow and see what happens with this recommendation. Okay, what else, guys? What if we fail? Now this is an important thing. What if we fail to break above 68.95? One was on the chat, what or should I sell the Aussie? Well, if it fails to break 68.95, that would be justified. You can look at the chart and say to yourself, yeah, there is a reason for a short position here. And you can do that, of course. Now, if you do sell in the 90s, for example, or after reaching the 90s and then start dropping in the 80s, 70s, something like that, you should place your stop above 68.95, not very far, because breaking this area means that the price is going higher. So you don't want to wait 40 pips above this area or 50 pips. In my own opinion, 20 pips above this level, maximum 25 pips above it, and that's it. So our resistance is 68.95. That means the maximum stop for a short position should be 69.20. Don't wait more than that, because it can go higher and higher and higher. But if it moves in your direction, that's great. The first thing that you should, as our friend here is asking about, he's interested in shorting it. The first thing that you need to happen in order to have faith in your short position is, of course, breaking this Fibonacci level that we have been talking about, 68.44. So sorry, we calculated it on the assumption that the price will go to a 69.05. So you need to calculate this retracement to the highest price seen at the time of your position. At the time, at this time, it is at 32. But if it goes to the 90s, of course, you need to move this to the highest price we see. So right now, we cannot define one level. I want you to follow this. I want you to calculate the retracement level for this move, this last part of price action here, which started on the 24th of the month. And of course, if it breaks the 61.8, that is after failing. The first step is failing around 68.95. The second step is breaking below the retracement level, the 61.8 retracement level for the last part of this recovery attempt. Then you will have two reasons to expect a drop in the Aussie. The third one is, of course, this trend line. When we start trading below this trend line, at the moment this trend line is at 67.70, I think, yeah. But it's a rising trend line. It's going to go higher 1 pip or something like that every hour. Once we start trading below this trend line, then your short position will be in a fantastic situation. You'll be expecting the price to drop, and you will be already in profit, and very good profit, by the time we reach this trend line. But which way I expect more to happen? Of course, I expect it more to move higher. And once we break above 68.95, that would give me a very good reason to be on the long side of the market, to have a buy position. Here we did not break above 68.95. Now start dropping, so it is in the middle right now. It is not a good time to initiate any kind of position here. Okay, guys, my recommendation for the day is this. I'm going to keep it on the chart, and I will come back to see tomorrow if it worked. Okay, so this is it for the Aussie. Now let's talk about the yen. Before we switch to another currency pair, I'm going to take a minute or two to talk to you guys on the chat. I have a lot of comments here. To all the guys who made profit from yesterday's session, I'm very, very happy about that. And to all the guys who made profit on pairs that we did not talk about, like the dollar yen, I'm also very happy for you. Congrats and kudos. So Harry was the one asking about selling the Aussie dollar. I hope that you got your answer, buddy. We talked about the Aussie for a while here. Now we are talking. We are going to talk about the yen later. If you have any question, please shoot. Munther, can you share the stochastic setting? Of course, man. This is my indicator template. These are my indicators, buddy. And these are the settings that I use, okay, which are the default settings on this charting platform that I use. So the K is 14, the D is 3, and the smooth is 3. These are the settings that I use. I know a lot of people use 533, and that is okay, but this is also a very good setup. And it's a very good indicator. I prefer RSI to anything else, but of course stochastic and MACD are very helpful, and of course moving averages. I love moving averages. So please, if you have any question about any indicator, how to use it, what numbers to use, any question at all, please shoot. Michael, I hope this answered your question. Is this what you are talking about? You wanted me to share the settings for the stochastic. This is stochastic indicator, and as you can see on the screen, 1433 KD smooth, K is 14, D 3, and the smooth is 3. But having said that, I really encourage you, and I always say this in my training courses, I really encourage you to explore, to experiment, use any numbers that you think would work. Just take a look at the chart. Is it working, not working? I do this, I used to do this, not now, but I used to do this all the time. I sat on the chart, and yeah, they taught us that the 14 is the number to use on our side. Yeah, okay. Well, in training they said 14 is the default, 14, but I wanted to try other numbers. Now I don't use 14 at all. I'm going to show you my number. For example, it is 11. I found out that 11 makes it easier for me to understand the market, and that is something really, really important and personal. Even I read it in one book. I'm trying to remember which one, but it was a book about indicators. I think I will remember which one in specific, because I read so many books. I read this thing, and I really believe in it. It said that indicators are personal. You need to experiment and look for the numbers that help you understand the market the best way that suits you in specific. That's why it's not the same number for everybody. Go out into the wild, into the jungle, this jungle that we call market, and try different numbers. And when you find a number that makes you feel that you are understanding what's going to happen in the market, that is the number you should stick with. For me, RSI 11. Did you see anybody else using RSI 11? I have not. 14, 9. 14 is, of course, the default. 9 is something that a lot of people use, especially on the daily chart. For me, I use 11 on every time frame because it makes me feel like I am understanding the market more. I have tried 14, 11, 9, other numbers also as well. And at the end of the day, I found out that this number suits me. So I want you to find the number that suits you. Start with the default. Great. This is the default for this indicator. But don't stop there. Start with the default, but don't stop at the default. Okay, guys? Okay, what else? And MACD too, of course. Heather is asking me about this setting for the MACD, of course. The MACD, honestly, I'm still using the defaults that we have learned about and almost 20 years ago when we started this business. It is 26, 12, 9. That's it. I did not change. Wait. I still use that most of the time, but I still experiment. But the numbers are still the defaults. This is what I recommend to you. Even if I experiment with other numbers, I did not find something that I consider really special that is not the default. So for Mac specific, I would recommend you guys using the default numbers. Okay. But of course, again, experiment. Go out. Believe in yourself. We are all analysts here. If you are trying to analyze the market after trading for 3 or 4 months, or if you have 20 years of experience, we are all analysts here. We should believe in ourselves. We should believe in our abilities, and that's what I want you to do. I want you to go out and believe in yourself and find the best number for you. Okay. And Nick is asking me to look at that trend line. Well, Nick, you have to be more specific than that, buddy. Which trend line in specific are you talking about? We have many trend lines on the charts that we have talked about so far. Of course, I cannot be looking at the chat every minute because I want to talk about the market. I talk about the charts, so I want to keep my eyes on the charts. But from time to time, of course, I'm going to take a look at what you guys are saying, and I'm going to answer every single comment or question in the chat. Oliver, you have not heard about QTime FX. Well, it's our broker, buddy, and if you believe in FX Educast, you are going to believe in this broker. It is our broker. We have great relationships, and we want you to come and open your account with us so we can always provide you with these trading sessions, with training, with different kind of webinars, recommendations, live recommendations, live market analysis that will help you achieve better results in the market. So when you become a client of ours, you are helping us, helping you. We want to keep on providing you with these services, but of course, this is a business, So we are providing these services for our clients because we love them and we want them to make profit. But of course, we have to cover the expenses for these services. So we want you guys to open accounts with us. And trust me, you're going to be happy. The spreads are amazing, no commission, and bonus as well. So you are going to get all of these things, and I want you to be using them to make the best results possible. Oliver asked me if I use QTime FX. Yes, buddy, I had this question before the break, and I showed you my account on QTime FX. This is a live account. As you can see, and this is my account. Michael uses QTime, great. And yeah, the no commission is fantastic, buddy, of course. If you are paying commission on every trade, you know, some of us get in, maybe you buy on Monday and you leave it, maybe you close it on Wednesday. That's not going to cost you a lot of commission. But if you are a real active trader like me, I get in and out of the market sometimes. Of course, sometimes I leave the trade for 2 or 3 days. Of course I do that. But this is not what I do most of the time, not what I enjoy. What I enjoy is to get in, get out, get in, get out, get in, get out. Intraday trading, I love that. And see at the end of the day how many packs collected. So if you do that, and every time you get in, you are going to suffer, and yes, I'm going to use this word, suffer, the barrier of commission. Then if you calculate how much commission you have paid at the end of the day, and you got in 6, 7, 8 times during the day, 10 times, my record, maybe I said this in a previous webinar, my record is 40 trades in one single day. That's the record. I have not traded above 40, but I did 40 trades in one day. Most of the time when I have time to focus on the chart, have my laptop in front of me and just want to trade, it is very easy to trade more than 10 times a day. Okay, and collecting a little bit of profit here and there. Or if the trade is going against my expectations with a little loss, I cut my loss, I close it, a little bit of profit there, a little bit of loss here, and at the end of the day, I look at my balance and see what is the result. I like doing that. So if you do this and you pay commission every time you get in the market, that is going to hold you back, of course, because just even if the commission is 1 pip, $10 per standard lot, if you have 250 trades in a month, for example, that's $2,500. So having commission is, of course, not a very good thing, and that is why here at QTime FX we want to offer you trading without commission, so you can achieve more profit and be happy with us. Because when you're happy, we are happy. We want our clients to be happy. That's why we do these webinars. We help you find the best trading opportunities in the market, and we really want you to make it, guys. What is the advantage Oliver is asking? I suppose you're asking about our broker. Well, of course, then trading with no commission, very tight spreads, that's a huge advantage. And we also have bonus, and we secure the funds of the clients. So everything is great. Everything is how it should be for the client, not to be worried about their broker. You know, I have a good broker, now let me focus on the market. This is how you should focus your abilities and time and thinking towards trading, not towards worrying about this broker. Well, what is it doing right now? Is this the right trade? Is this much rollover they calculated on? Oh my God, what is this commission? When did this appear? So that's not what you need to focus on, because if you waste your time on thinking about these things, how can you focus on the market and make the right decisions? We want you to focus on the market and make the right decision. Okay. That's why we are giving you excellent trading conditions. Okay, guys. Ram Heinz, I'm asking you this for the second day in a row. Okay? Is this how I should say your name? Ram Heinz. Okay? I think I'm saying it wrong. So please let me know if it's right or wrong. You disagree. Okay, tell me, what do you disagree with the analysis. Are we talking about the Aussie? We were talking about the Aussie. I assume this comment goes back to the Aussie dollar. Well, but I'm always, I'm almost always wrong. Well, everybody's wrong sometimes. Everybody, my friend. So if you are Warren Buffett, you're going to be wrong sometimes. So it's okay to be wrong. I'm wrong. You are wrong. But wrong. Everybody is wrong sometimes. And well, just when I'm saying this, I'm looking at the price of the euro. We are in the 20s, and I think the fun is going to start. Okay, we are now trading just a little bit above yesterday's high. Okay, we are starting to trade above yesterday's high, and that is fantastic for our bullish expectations. So I really hope that this will go on. Be trading higher and higher through the day. I really like that, and I want that to happen. Of course, we talked about the euro a lot, and I'm sure you understand what I'm talking about. So we want the euro to move higher, and it is moving higher. This is fantastic. I really hope it continues to the upside. Okay, guys. MACD, Nick does not use the MACD. Well, it is a good indicator, buddy. But the bottom line is this: use indicators. They are helpful. They are good. But always make the decision using the price action. The price itself is your main decision-making tool, and not the indicators. Okay. So even if you get a signal on an indicator, I would really, if I get the signal on the indicator, I would really wait for the price to break something to confirm to me that yes, the price, I'm going to move in the direction that this indicator has suggested. Okay, guys? Virtual Wave, welcome, welcome. Praveen, sorry about that, I'm trying to get it right. Praveen, welcome, welcome. We have you analyst, a new trader, a new investor with us. I really hope you enjoy these webinars, buddy. And we were just talking about how the euro is moving to the upside. Great news. Keep your eye on the euro for today. We are expecting it to reach 1209. This is the limit for our long position. That is now around 25 pips of profit. It was around 15 pips when we started analyzing this morning, and now it is around 25. Still, it's a modest profit. It's an okay kind of profit, but it's not what we are hoping for. We want to achieve more than 100 pips on this trade, and I want to close this trade in front of you with more than 100 pips, so you know that these opportunities, these trading opportunities that we are providing you with, are really good. Okay. Ram Heinz, don't lose faith in the euro, buddy. Let me tell you one thing about myself. I was buying the euro in July, and I had many stops hit. But of course, I keep my losses under control. I don't make huge losses, 150 pesos. So I never do that. So I keep my losses under control. In July, I'm going to tell you this. I was wrong about the euro most of the time. Okay, but after that, when the price started recovering, of course it went up, then went down, then went up again. Things started to get much better, and of course this month is much better for me on the euro than in July. And, so it's okay to have a period when you are not right about the market. That happens to everybody. I don't want you to be hard on yourselves, guys. Nobody gets it right all the time. Nobody, not a single person on the face of the planet. The biggest traders working for the biggest banks in billions, they don't get things right all the time. Nobody does. Billionaires don't get things right all the time. But when you are wrong, you need to control your losses. That's all. That's the art of trading. That's the secret of trading. A lot of people get it right many times, and then a couple of times wrong. It's not very hard to be to use technical analysis. Of course, you need to read books, you need to have experience, but it's not a very hard thing. So when you are losing it, when you are right, you will make it in this market. This is my promise to you. But if you let your small number of I'm not going to say that are wrong readings, but when the market's not moving as you expected, if you let these few times eat the profit of a larger number of correct and accurate readings about the market, then you will never ever be a successful trader. So it's all about this. Control your losses during the times when you are not right about the market. That is it, guys. That is it. I'm giving you the secret to becoming a successful trader. It's not to have your analysis right 95% of the time. It is not that, I assure you. And I have been in the market for 19 years. In December, it's going to be exactly 19 years, 1 month from now. And I assure you that what I have learned in this, I'm calling it a trip or a career trip, a journey, what I learned is at the beginning, of course, I was thinking, just like a lot of beginners believe, that you have to have a correct analysis of the market every single time. That's not the case. You do not need to do that. All you need to do is, when you're wrong, you need to control your losses. That's it. This is the secret of being successful in the financial markets. That's it, guys. Okay? So, now, after talking to you guys, okay, Nick. All right, guys, after talking to you, and I enjoy reading your comments on the chat very much. After we have finished, yes, 19 years, Heather. Thank you very much. I know I look 18, but I'm not really 18. Okay. So, guys, after talking about your comments that I really enjoy and appreciate, I really appreciate you. I really appreciate everything you say. Any question you may have whatsoever, I thank you for your questions about how to use the indicators. I really value that. After that, after talking about everything here on the chat, let's move to the charts again. And as you can see, we are now going to talk about the dollar yen. Okay, so the dollar yen. First of all, of course, you know me, I like to start on the daily chart. I like to see the shape of the candle or bar that we had yesterday. This is the first thing I look at. And then I move on to smaller time frames, shorter time frames. Nick, you are most welcome, buddy. I always talk to you. No, you are welcome. Come on. Okay, so yesterday we have reached the highest price in quite a while. It was just pips above, of course, the previous day's high. It was 75. We were trading at 66 the previous day, and this was the highest price since August. So yes, it was only 9 pips above Monday's high, but these 9 pips were enough to provide us with around almost a 3-month high. Unfortunately, we touched that high and we started falling again. That's why we see a red candle here. It is small. It's not a huge reversal to the downside, yet we need to be careful about it. Okay, guys? And let me see what the indicators say, RSI especially. It's around 45, 46, not a key reading. No signals here on the MACD. Also, the stochastic is not in the overbought or oversold area, so not a lot of help from the indicators on the hourly chart. Always use trend lines and support and resistance lines. In my own opinion, of course, I value every technical tool that I can use to make the right decision, but these are the most important in my own opinion. These are the most important. So, as you can see, we have been recovering for a few days, actually 8 days. On the 22nd of the month, we were trading around 108.22, and now, of course, we touched above 109, sorry, I think by mistake I said that the high was 108.75. It's actually 109. I'm sorry about that. 109.07. This is the highest price we have seen during this recovery, and now we started dropping towards the trend line. I really don't want to see the price trading below this trend line. I really do not want to see that. Okay, but even if it does not have to be the end of the world. Again, I'm going to use my Fibonacci 61.8 level as a backup support, which is around 108.54. So the trend line is currently around 78. Let's call it 74, because we have a bottom here just above this trend line at 74, intraday bottom, of course. It's not a major bottom. So we have 74.54. These are the support levels for the dollar yen at the moment. Maybe we can find a more meaningful trend line. And voila. As you can see, the rising trend line from the low, which was seen early in October, is running also between the two support levels that we talked about, which are the 74, this low here, and the 54, which is the Fibonacci level. The trend line, let me delete this trend line, this small trend line, and keep the major trend line. As you can see, this trend line is currently in this area. So we have 3 reasons to believe that we have an important support between 54 and 74. Okay, guys? In my own opinion, if we break below the bottom of this area, that is a short. You can sell the dollar yen. Now, in order to specify what kind of stop loss we should be using, we need to leave the hourly chart and look for longer term charts, and it's, in my own opinion, it is obvious. Even the calculation is still there from a previous webinar. I remember this calculation. We calculated, we said, I think in the 930s, it was 37 the level, if my memory serves me well. Yes, it is. 109.37 is a Fibonacci level for the previous drop from the top seen in April, which extended until late August, 4 months or so of dropping. The Fibonacci level from that 61.8 level for this drop is 109.37. And what makes this level double important is this high here. As you can see, the high is 32, 109.32 here. We tried to recover here, a recovery attempt by the bulls. They failed in the 30s and they dropped sharp. This is a very sharp drop. The top that was seen immediately before this sharp drop is in the 930s, and the Fibonacci 61.8 level is in the 930s. So there is a very important resistance in 109.30s. Let's call it 37, because The high is 32 and the Fibonacci is 37, so let's focus on 37. So if you sell a break below this area, unfortunately you cannot place a stop that is 30 or 40 or even 60 pips, because you need to wait for 54 to break this line here. If it breaks, we are selling. But keep in mind that your stop is going to be larger than usual. It's going to be above 109.37, and even if you place it only 10 pips above that, which I do not recommend for the dollar yen, I want more than that. Even if you place it at 10 pips, that leaves you with almost 100 pips of loss. In these situations, what I do is I lower my trading size a little bit. If I really want to get in on a trading situation, and the technical analysis tells me you cannot place 40 or 50 pips of stop here, you need to wait for 100, 110, 120 pips. If I'm used to trading one lot, for example, I'll make it 0.75, 0.6, something like that, in order to keep the dollar value of this stop, this 120 pips of stop, close to what I usually suffer when a stop is ahead. So if I usually place my stops at, let's say, 65 pips, trading one lot, that's $650. Okay, now I have 120 pips on the dollar yen, which is around $9, the pip value for this thing. So if I use one whole lot, 120 pips multiplied by $9, that's $1,080 of stop. I don't want to pay that much. If I'm wrong about the market this time, I want to keep it in the 600 to 700 area. So I trade, for example, 0.75. 0.75, that will leave me, no, I need to do even less than that. Let's say 0.6 of a lot. 0.6 will leave the 120 pips value at $648 to be exact. Yeah, I calculate everything up here. So if you are used to trading one lot and you want to get in this trade and place a stop of 120 pips, this time you need to use 0.6 of a lot, 6/10ths of a lot, not a whole lot. Okay, some quick risk management techniques here for you. Let's go back to the chart. So a break below this area is a shorting position below 54. Let's say 15 pips below that. I would place my short position 108.39, and my stop, as we have discussed this, we want our stop to be above 37. I'm going to place that 20 pips above 37, so it's 109.57. This is my stop, and my limit, of course, should be large, because I am using a stop that is 118 pips. Now I need to have a limit that justifies using this large stop. So let me take this down a little bit. I want a limit that is more than 100 pips, and it's not very hard to attain. I want to delete this I don't want to make a mess here. There's an expression that I use when I see a trader using too many trend lines, too many indicators, and a lot of retracements on the same chart. I say to them, you're making a salad. This is not a chart. You're making a salad. You know, all sorts of things are combining together like a bowl salad. Okay, so in my own opinion, a break below the area that we have just talked about should push the price lower towards one of the retracement levels for the most recent part of the recovery attempt. We got the 50% level at 107.75. Is that good enough? Is that good enough, guys? 107.75. We sell at 108. 108. We sell at 108.39, 107.75. Nope, no, that's not good enough for me. So what I really want to do here is to find another retracement that is 107.47. We're getting close. We're getting close. You know, I really want it to be even more than that. Sorry about the noise coming from outside, guys. Okay, 107. Yes. That is a good target. As you can see, the 107.02 or 03, actually it is 03. We have this candle low here, and we have highs that are close to it. So we could push as low as 107.03. And using such a stop requires us to use a limit that is good enough, more than 100 pips. So 136 pips on our limit, 118 pips on our stop. That means that we need to use what, guys? A smaller trading size than usual. Well, I'm hungry too, buddy. Let's go out and eat something after this. Okay. So this is the bearish possibility on the dollar yen. Is there a bullish possibility? Let's see. Let's go back to the daily chart. And honestly, we have specified and defined the retracement and resistance that is important for the long-term analysis, which is of course 109.73. So in my own opinion, selling before breaking the 109.37, sorry, before breaking 109.37, buying the dollar yen is not really justified. So if we break above this level with 20 pips, let's say, and that of course leaves us at the stop here, if we reach 109.75, that could be a good place to buy, because after breaking such an important retracement and previous high from which the price dropped this sharp, I really believe that that is a strong sign of strength. Strong sign of strength is that it is a good word sequence. So if we got enough strength to reach 109.57, then the price will be expected to continue moving higher, at least in my own opinion, towards 110.74. So we can flip this. We can have an entry that is a stop at the stop of the previous signal, a buy at 109.57, a stop at 108.39, the entry for the sell, of course, and a limit at 110.74. There you go, guys. We have, this is the main recommendation, and in case things move against our expectations and the price starts moving to the upside, this is the recommendation that we have. Okay, so if we start falling, if we start trading below 108.4, that's a reason to sell. Keep your stop far, because we can easily go to 109.30s. even if the price is going to fall later. Visiting 109.30s is something that should be expected. And even if we get there, that does not mean that our short position is done. No, if we break above the 109.30s, then we should not be keeping our short position. But as long as 109.30s does not give way, if you are short, keep your short position. Okay, remember to use good risk management skills, because the stop here is more than 100 pips, so you need to lower your trading size. You really need to do so. Don't use the same trading size that you always use for this trade. Okay, guys, so sell at 108.39, stop 109.57, limit 107.03. This is the short recommendation for today. The longer recommendation is to buy if the price reaches 109.57. In my own opinion, that is not a big possibility, but of course it can happen. And not my favorite scenario. My favorite scenario is the sell position. But if this surprise happens and the dollar yen keeps moving to the upside and reaches 109.57, we can buy. A buy would be justified with a stop at 108.39. As you can see here, the entry for the sell is the stop for the buy, and the entry for the buy is the stop for the sell. So if we buy at 109.57, our stop will be at 108.39, and our limit will be more than 100 pips at 110.74. This is what I think about the dollar yen for today. And now we are going to take another break, guys. 5 minutes or so before the last part of today's analysis. I'm gonna look at your requests if you have requests when I come back, and if you have requests, of course I'm gonna take care of that. Let me remind you that this free webinar is sponsored by QTime FX. Come join us, guys, come join the fun, and let's keep supporting these free webinars that we are giving to you because of generosity of QTime FX, our favorite forex broker, who is awarded for the lowest forex spread broker in 2018. 4/10 of a pip on the euro dollar, 4/10 of a pip on the dollar yen, 0 commission, $500 bonus. So what are you waiting for, everybody? Contact us at fx_educast via Telegram and let us open these accounts for you, where you can apply all these great trading ideas that we are going to offer you every day. For the time being, I'm going to take a break of 5 to 10 pips. You got 5 to 10 pips. You see what happens? You see what happens when your mind is focused 100% on trading. Instead of 5 to 10 minutes, I said 5 to 10 pips. That's how much trading is here. You know, it's occupying every cell in my brain. So after 5 to 10 pips, we are going to come back. See you in 5 to 10 minutes, guys, and please stay tuned because we are going to talk about more instruments, more trading opportunities after the break. Take care. Okay, welcome back. I hope you enjoyed this short break. Welcome back, everybody. This is Munther Marji again with FX Educast and QTime FX. We are very happy to have you with us today. And after 2 hours, of course, of analyzing the market, we still have some time to look at other instruments. First of all, I'm gonna take a look at the chat to see if you guys want anything, if you want me to analyze any instrument for you. Jaco, hi Jaco. Yes, you will get your bonus, of course. This is the offer that we are promoting. You open account with QTime FX through us and you will get $500 of bonus. Rachel, hi Rachel. I think this is the first time you are here. So if you are new, welcome. Why is this free? That's a good question. It is free because of the generous sponsorship of QTime FX, your broker who wants you to get the education and to get a good view of the market, and they want me to provide these analysis sessions and trading sessions so you can find the best opportunities in the market. This is why it is free. It is 100% reliable broker, of course, Rachel. We do not promote brokers who are not reliable. Julie has been our client for almost a year. That's great, Julie. So tell us, what do you think about QTime FX so far? Did you enjoy your first year? Do you think they are a fair broker? What do you think about the very tight spreads, the no commission, and all the great details that QTime FX is providing us with? Let me know what you think. Okay, so we have been talking about a lot of instruments today. If you have anything, please shoot. Anything you want to see me analyze, please shoot. Okay. One of the things we did not talk about today is our beloved shiny gold. I know you like gold, guys. Everybody likes gold. Everybody is asking me all the time, what do you think about gold? What do you think about gold? Gold and euro, I have said this before. Gold and euro are the two instruments that people ask me most about. Yesterday, we said that there's a good possibility of a drop, and we did drop, but the bearish gains were short-lived, unfortunately. You know, this is a drop that we expected, we talked about, and yes, we reached as low as 1483, but unfortunately, after that, the bulls attacked us and pushed the price higher. So is it still the same? Is the situation still the same like it was yesterday? Let's take a closer look. First of all, I want to take a look at the daily, as I always do. What's this? What is this mess, huh? Yeah, this is more like it. Okay. The daily, of course, we said that we were expecting a drop because of this candle. It is a shooting star, one of the strong bearish candles. And the fact that it happened inside the moving average band with nothing but shadow above the top of the band was bearish. And of course, we saw a result of that on Monday and again yesterday. But after reaching a very good level to our bearish expectations yesterday, around 1483, the price started recovering, and we are currently trading around 1490. So we have recovered about 70 pips up from yesterday's low after a drop that was expected. Now what? Yesterday first of all, the first thing that we did yesterday was on this trend line, and trading below this trend line yesterday a little bit was encouraging for the bears, but unfortunately we are back above this trend line. Now what we need to see is the price trading below this trend line again. I'm gonna adjust this trend line to be fit 100% to the hourly chart. Highs and lows, or the bottoms and tops on the hourly chart. Yes, this is exactly how I want it to look. As you can see, this is a very interesting trend line. Trading just a little bit below it. It got me excited yesterday, thinking that we can push down towards the 70s, but the price recovered. Now we are above it. This trend line is around, for the current hour, it's at 87.6. Of course, it's a rising trend line. Every hour, maybe it's going up a pip or 2 pips, something like that. So let's call it 88, 1488, around 20 pips below the current price. So this is the support that we need to focus on today. As for the resistance, in my own opinion, I'm not gonna start with using the trend lines or support and resistance lines. I'm gonna start with using this moving average. The simple moving average 49 is going to be my initial resistance at 91.6. So we have support and resistance at these levels. The initial, of course, we have more than one support, more than one resistance level, but the initial ones are supported 88, resistance at 1491.7. Okay, it is 0.67, so I rounded that to 0.7. Gonna keep this piece of information here on the chart. It is easy to say that once one of these levels is broken, you can follow the break, but these are only initial support and resistance levels. Actually, for the support, it's a good support, but for the resistance, it's only made of a moving average. So I might be looking for more than that, looking for horizontal resistance levels, falling trend lines. Falling trend lines, as you can see, there is no falling trend line that can be drawn from the top here, which will be running above current prices. You cannot find that. So I'm gonna be focusing on horizontal resistance levels and retracement levels. This is a resistance. We are currently at the resistance. On the way down, as you can see, on Monday, we found a support around 1490. As you can see, these are, of course, hourly candles. The lows, as you can see, 89.90, 90.08, 90 exactly, 91.9, 90.66, 90.18, 91 here, 90.06, extremely close. As you can see, we are now challenging this previous support, which has turned into a resistance. So we also have a resistance that is at current prices. Now, what about the retracements? We have retracement levels starting at 96.6, so not very close to where we are trading right now. That's why we will not consider them as resistance. We will consider them as targets if we start rising above the resistance levels that we talked about. So I'm going to stick with 91.7 as a resistance, 88 as support. Anyone that breaks with, let's say, pips, I recommend going in the direction of the break. So where does that leave us? Let me write that on the chart for you. I'm going to keep these texts on the chart until tomorrow so you can see what happens to these recommendations. Support is 1488, 15 pips below that. That's my sell at 1486.5. Now the stop should be, of course, the trigger level for the buy signal, because we have two levels, a support and a resistance. If we break below the support, we initiate a short position. If we break above the resistance, we initiate a long position. So because we are going to initiate a long position above this resistance, we cannot keep our short position. That's why the stop should be exactly at the level where we initiate a long position, and that is of course 15 pips above 91.7. that is 93.2, 1493.2. 32 and 35 pips are what? 67 pips for gold. That is a modest stop. Usually I do more than 590, 95, something like that. So this is a modest stop, very good stop for today's trading. Now, if I sell, of course, I need a limit. So once we start trading below this trend line, again, if we do, I believe that we can go back to the 70s, because the 70s has been visited many times. We have support here, important support. So I'm going to go for this touch on the line, this bottom here, as my limit. And this touch, let me lower this a little bit. This touch is at 76.9. Let's call it 77. 1 pip is not important. It's not that important. Okay, so limit is 47. What about the long position? The long position, of course, 1493.2, stop at 1486.5, and a limit at one of these retracement levels. Something around 100 pips would be okay, because the stop is only in the 67 pips, so 100 pips would be okay. I'm looking for something just above 105. For example, this Fibonacci level here is 101 or 1500, $4.74. What about this top here? I want to push it a little bit, or these tops here, just above the Fibonacci level. I like these very much. 105.06.2. This is my limit, so I'm exactly 130 pips. Now, while I was saying that, I noticed that the limit for the short position is not even 100 pips, and I don't want to go below 100 pips. Gold is volatile, it can move, it can generate great trading opportunities, so I want my limit to be more than that. That's why I will go back to the chart and look for another limit. Is it possible to reach below 77? Maybe the next point. On the, and it's 73.8. Let's call 73.8. No problem about that. 73.8. So these are my gold recommendations for today. These are the two trades that I think, of course, I'm sometimes, or most of the time, I'm providing you with two trades in opposite directions. Why? This is a question a lot of people ask me. Why? You say sell and you say buy, and you tell us to wait for the market, but not initiate a position immediately. Why do you do that? Well, that is simple. That's a very simple question, and I have a very simple answer. It is because I love to let the market lead me to it. The market leads you. Come with me. Let's go. I'm moving higher. When the market is moving higher, you should follow that. You should not have a bias that cannot be moved. You're very rigid. You don't want to talk about it. Buy is buy. I think gold is going up, so I want to initiate my position right now. Well, what if the price starts falling? No, 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 no. Gold is going up and I want to buy. I don't want to sell. I don't want to buy. That kind of trading is, it is something that I try with my all might to avoid. Of course, I'm a human and I have bias. Everybody does. Sometimes you are cheering for the bulls, sometimes you are cheering for the bears. When I do have bias, that comes from the charts, not from personal point of view. So if the chart is favoring one side over the other in a very heavy way, yes, a bias is justified. Otherwise, it is not justified. So that is why I always give you two trades. Sell if the price breaks an important support, buy if the price breaks an important resistance. The skill is to identify which support and which resistance that when broken will result in a good move in the market. This is the skill that you need to trade in a good way. Okay? But you do not have to pick sides right away. You let the price help you pick the side you want to be on. Okay, guys? So this is it for gold. For the short term, one of the things that I want to take a look at, since we only have 10 to 15 minutes, I don't think we have enough time to talk about another instrument. But what I really want to do here is I want to take a look at gold on the long run. Okay, all these trades, of course, they are not for the long run. I'm not giving you a trade with 500 pips, 700 pips of profit and 200 pips of stop. I'm not giving you these kinds of trades. I'm giving you trades that are expected to reach their target between 24 to 72 hours. This is what I estimate. But it is always good to know what is the big picture, because it can really help you understand where are we right now, where is the market right now. So the big picture is very helpful. It can help you make the decisions when you want to get in the market. That is why, although I do not trade for the long term, I trade for the short term, obviously, day trading, sometimes even intraday trading. I get in and out in a matter of minutes, or trades that I expect to close by the end of the day or in 24, 48, 72 hours, something like that. I don't want to keep trades longer than that unless I really, really have to. Although this is my method of trading, I still believe that it's very good to take a look at the long term. This is what we are going to do for the last 10 minutes of today's webinar. I'm going to take a look at the long-term gold analysis. And as you can see, guys, of course, we had a great run after the rate cut. Of course, you know that. Let me change, sorry, to the daily before talking about the long term. Yeah, as you can see, guys, we had a great run on gold. Not everybody was expecting this move. Honestly, I got extremely interested in gold after the first rate cut on the dollar this year on July 31st. Before that, I was focusing more on the euro and other instruments. But we had this break of what looks like a bullish wedge formation, sort of, which happened late in May. Since we broke this formation, we have achieved more than 2,500 pips to the upside, which is of course technically justified because of this break. This is fantastic. The magic move was maybe half of this move, or even less than half. But we got to the upside with extreme strength. helped by, of course, the Fed and monetary policy in the United States. But regardless of the reason why gold is rising or did rise in this unbelievable fashion, we need to understand and to try to estimate, is this going to go on for 2020? Well, a look at the monthly chart would not hurt. As you can see, we had great months in June and August, unbelievable gains, beautiful, beautiful months. But then we had a September that was not very kind to the precious metal. Now we are trying to recover from the scene in September. Of course, we only have one day left, so I don't know if gold can push higher again. A close above the previous month's open would be extremely bullish. We opened September on of course, a strong note, 1522 or 1523, 1522.78, 1523. We are talking about a monthly chart here. 2 or 3 pips should not be an issue. So we need to see the price close above 1522 on a monthly basis, which means that tomorrow we are going to look at the chart and see what kind of candle October has left behind. This is October candle. I want to see gold close as possible to 1522 or above that. Okay, during this month the highest price seen was 1519.7 seen on Friday. From there the price completely collapsed. So if I close around current levels, as you can see, I'm going to leave a long upper shadow behind me, which is a sign of weakness, especially when you have this much of a body. The upper shadow means that we have traded this high, but come closing time, the market retreated here. It was unable to close on strength, which is obviously a weakness sign. So if we close around current levels, that would not be very good for the precious metal. But if we use these 36 hours or so left in this month to close closer to 1522, that would be good for gold. What about the weekly chart? The weekly chart as well, of course, after this unbelievable run, we had a shooting star here. And this is not an ideal shooting star, but it surely shares a lot with a shooting star formation. And the price dropped, of course, from almost 1,000 pip, from around 1550s to 1450s, or I think 60. No, actually we touched 59. Yes, 59. After dropping 1,000 pips, the price started recovering. Now we need to see strength here. You know, this week is a weak week, as you can see, and if we break an important trend line during such a week, that could result in a strong drop to the downside. Let's move on to the the daily chart. In my own opinion, of course, I have been using this trend line for quite a while now. This trend line is at 88. I really believe that breaking 88 would be very harmful for gold. We are talking about 100 pips as an immediate target, but it can easily drop below this previous bottom, which is 1459. So from 88 to 50s, we're talking about 300 pips or so. And that is the kind of target I expect if we break 1488 today. Okay, now what about the resistance? The support, again, I just want to say this again. This support is very important, guys. Okay, keep your eyes on 1488. And especially today, of course, today we have the Fed. We did not talk about that. We don't talk about fundamentals a lot in these webinars. We focus on technicals, but today we have the Fed decision. So watch out for that. Of course, gold, euro, all dollar-related instruments are going to be moving up and down today when the Fed tells us what they have reached as a monetary policy decision. But gold, of course, it's one of the main instruments that are affected by the Fed. And whatever the Fed says, it's going to affect gold up or down. So today, the close of the day, the shape of the daily candle on the daily chart is going to be very important. If we close below 1488, of course, I'm not talking 3-5 pips. For example, if we close below that 30-40 bips at 1485, 1484 or lower than that, that means that this trend line here is broken. And when this trend line is broken, we will have a very good chance of visiting areas that are below the October 1st low, 1459. Okay, so I cannot tell you enough how important 1488 is. Okay, now for the resistance, it's not as obvious because we do not have such an elegant trend line like this one on the upper side of this chart, but we can use our microscope and go to the hourly chart. And as you can see, of course, we talked about 91.7. This is our initial resistance for today, but even breaking 1491.7, even breaking this level to the upside, it's not a major level, so we cannot say that, wow, we traded above 91, that means we're going up 300 pips. Of course, that can happen, but it's not a major resistance that we should expect this to happen from. Honestly, there is no major resistance in this area. We have retracement levels around 1496.6, 1500.7, and 1504.7. All of these levels need to be watched, but none of them is really super important like the support is. The support, in my own opinion, 1488 stands alone. You know, I am the support for today. 1488, you need to watch me. But we do not have the same thing with resistance levels. We don't have a resistance that is screaming out loud that it is the resistance to watch. Today, I don't know if you know, the retracements will help us. Of course they will help us, but I don't think any of them is as important as 1488. So what you need to do if you are watching gold and you want to know what will happen for it on the long term is that you need to watch it, and you need to see and observe and pay attention to the price and price behavior once it reaches all of these levels. Once we reach 1496.6, if we do, of course, you need to watch the price behavior. Are we getting this level, or are we failing to do so? If we are failing to do so, that may be time to short. But if you break it, then you do the same thing on the next level, 1570 cents. You do the same thing. Are we breaking through this level or not? And then you decide what to do. And again, at $1,504.70. These are the three levels that I want you to watch to the upside. If we break 1491.7, to the downside, keep your eyes on one level, 1488. Breaking 1488, a daily close below 1488 is going to be very harmful for gold. Okay? So this is it. Let me just remind you with our gold recommendations for the day. We have a short at 1486.5, a stop 1493.2, the limit is 43.8. Now, the buy is placed at the stop of the sell, with the stop of the buy at the entry of the sell. So that's why we have a buy at 1493.2, stop at 1486.5, and we have a limit at $1,506.20. Okay, guys, these are our recommendations for the euro, for gold for today. Let me remind you what else we have. I think we placed something on the Australian dollar, on the Australian dollar chart, okay. I'm gonna keep, of course, these recommendations on my chart and see tomorrow what will happen to them. We had a buy for the Aussie at 69.05. Up until now, we are around 35 pips below that. Our stop is 68.29. Our limit is 69.80. At 3, we also had something for the yen. I don't know why I'm not seeing it. I remember placing in a text box here. They are not appearing. Maybe we'll find them again, but I remember that we said that only with a break above 109.37 that a buy would be justified. 20 pips above that, so that's why we placed our long at 109.57, but we favor the short, which we placed below the bottom of the support area, 108.54 to 108.74. 20 pips below that we sell, and 20 pips above 109.37 we buy. And of course the stop is the entry for the other position. That's why it's above 100, and that's why I recommend, if you want to follow these recommendations, you on the dollar yen in specific, you need to lower the trading size that you are used to. It has been a great day because I shared these hours with you. Thank you very much for your comments. That is the strangest kind of break I have heard of. Okay, buddy. Nick, I hope you had a good time in your own break, buddy. Ram Heinz, we took 2 breaks, buddy. We did. Rachel, thank you. I'm glad you are enjoying your time here. Yes, it is a funny bunch of people. I like this very much. People who are always here. I like that. I really do. Julie, you're starving. So am I. I'm happy that we are done with today, so I can go and get myself something to eat. It is still 11 a.m. here, so it's time for some kind of brunch. And I only had tea so far since I woke up at 5 a.m. this morning. So it is time for something to eat. Yes, I am. I do check the chat, Rachel, but I cannot do that every minute. I do that between instruments. If I'm analyzing one instrument, I focus on that instrument. When I'm done with it, before I move on to the next instrument, I see what you guys have to say. I really like answering you, talking to you all the time. I really like that. Thank you very much. Heather, Rachel, Julie, everybody, Ram Heinz, Nick. I don't want to forget anybody. I'm sure we had more viewers before that. These are the most latest comments. I'm sorry about this. this noise coming from outside. You know, people on the street, you can't do nothing about that. And I'm working from home, so you know it is not like an office or something like that. It's a residential area with, you know, people on the street selling whatever they want to sell to people living here. Julie, your spread is 0.9. That's a good spread. Of course that's a good spread, but of course 0.4 is better, much better. So thank you, everybody. It's been a great webinar. I'm very happy to share these 3 hours with you. Be sure to join us again tomorrow at the same time. We are going to be here. We are going to talk about more trading opportunities. We are, of course, going to follow what happened to today's trading recommendations. We had recommendations on gold, yen, Australian dollar, and tomorrow we are going to check and see what happened to every recommendation we have provided you with. And I really hope by that time that you will find that these trading opportunities were good. Of course, we are also long on the euro from a previous position, not today. We did not open that today. We are in some kind of profit, but I really hope for more than that. So if you later in the day look at the chart and see that euro is trading higher than it is right now, you will know that I am a very happy man. Okay? At the end, I really want to remind you that this free webinar is sponsored by QTime FX, our forex broker, who are offering you unbelievable spreads with zero commission. Again, guys, low spreads with commission does not do any good. It's like having normal spreads, but low spreads without commission, that is the real deal. And we even going to give you 500 of withdrawable bonus when you open your account with us. Yes, you heard that right. Withdrawable bonus, guys. So what are you for? Come open your account with us. Contact us at fx_educast via Telegram, and let's open this account for you, where you will be able to trade the trading ideas that I'm talking about every day here. So join us, join the fun, join the real trading. It's not real trading when you implement the demo account. You will never learn real trading by only applying things to a demo account. You need to feel the real pressure of trading real money so you can become a real trader. Okay, so come open your account with us. QTime FX, FX Educast, and Munther Marji all wish you a fantastic trading ahead, and see you again tomorrow. I really hope everyone will be here tomorrow. It was so much fun talking to you guys today, and we want to do the same thing tomorrow. We want to have a fun session, talking, laughing, joking, and above all, finding great trading opportunities. So until then, goodbye, everybody. I wish you the best, as I always sign off with good trading and good luck. Thank you, everybody, for being here, and have a great day.